Good day, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here on this this 27th, Thursday, the 27th of May, 2021. Thank you for tuning in. There's this whole debate that goes on between deflation and inflation. What's it going to be? And, an awful lot of people think it's going to deflate. The system wants to deflate. Really, it does. But if it starts to deflate, they're going to keep pumping more money in. There's something that's obvious, should be obvious to the people who believe it's going to be deflation, is just take a look back in the 1970s. I was watching a show about the Old Country Buffet, and they got a film clip on YouTube. Just put in Old Country Buffet, and there's this young guy, he's a meat carver on there. It's a very interesting video to watch. It's right from the 1980s, and it shows. Well, if you watch, I watch it, and I can't get enough of it. I watch it, and I just find it so interesting. The video on Old Country Buffet, and is a training video for their meat carvers. It shows you how polite people were back then, and how courteous they were, and how things have changed. Did you know back then you could go to a buffet in the United States and they would have a meat carver there, and a big stack of beef and pork, and everything was cooked to perfection, and he'd slice the meat off. All you can eat, smorgasbord. Back then, for like $1.99 or $2.49. Some of them were like $2.49. Expensive ones for like $3.49. Now, what would it cost you for a type of buffet where you can go in and you can have carved beef, fresh vegetables and everything just like beautiful, and eat all you want? How much would that cost now? Take a look at what's happening. They're chiseling away at your dollar right in front of your eyes. You're watching it lose value year over year over year. It's slowly disintegrating to nothing. Yet the deflationists will argue out there that we're going to have deflation. The system's going to deflate. Yeah, you're going to print all this dollars, endlessly amounts of dollars, dump them into the system, have the M1 and M2 money supply go through the roof, and somehow miraculously these dollars are going to be worth more? I just don't get it, I think we're on a slow march toward inflation, and then later hyperinflation as it accelerates. The question is, how long is all this going to take? How long can they drag it out? This is what we're really getting down to the nitty-gritty, And you have to understand it's on an exponential. It's going to accelerate faster and faster and faster. The demise of these fiat currencies, because their real intrinsic value is zero. Let's get in there and let's take a look at the markets today. Let me get my charts going. Let's open up the charts right here and take a look at what's going on. We're looking at a silver price of $27.65. Now, because of inflation, you go back a number of years ago, and silver was $4, and people were saying, "Oh, it's too much. It's expensive." Now it's $27.65. That's because that's already a sign of inflation. You just go back 2 years ago, it was like $14. Now they're saying how cheap it is at 27 with a premium. That's the sign of inflation on the precious metals. Everything's going up. It's just that everything else is going up a lot faster. So we're looking at the silver price and we're saying, hey, that's cheap. Because everything else has went up even more and faster. So we got this inflation right in front of us. And it's like they're saying it's not here. It's here now. It's just that people are somehow they got blinders on. We're like the frog that's being cooked, and he doesn't notice he's being cooked, and because the temperature's going up so slowly. That's what's happening to us with inflation. We get used to these new numbers. We get used to always paying more for whatever we buy. But at a certain point, it starts to transcend that. when you start to make that jump into hyperinflation, people start to rush to get rid of their dollars because they know that prices are going up so fast. We haven't got to that stage yet. People still save in dollars. That is when you get to that stage where people want to spend their money as fast as they get it because they know the price is going to go up overnight. We're not there yet. But we're going to move in that direction and we're going to get there. The question is when. Timing and all this is very, very hard to predict, you know. Now we got Biden making this new $6 trillion infrastructure program. Will he be able to get this passed? Well, it seems to me the Republicans are talking about 900 and something billion, which is under 1 trillion for they're trying to make a deal or whatever. So we got one side saying 6 trillion and the other side saying no, less than 1 trillion. You know, there's a big difference there, big gap. But at any rate, my opinion on infrastructure is if you're going to have a hyperinflation anyway, get the country going. Build the bridges, fix the highways and everything else, and get everybody working, and get everything up to steam. Get everything up going really good and fast when you enter into the hyperinflation. And that way, it might not be so bad. You know, because we're going to have it anyway. There's no way out of this. We're going to have a hyperinflation in our future, and if they go the slow route, you know, maybe it'll take a little bit longer to get there, but you're going to get there anyway, and you won't have nothing to show for it. If you do all the big spending plans and everything, yeah, the hyperinflation will come a little bit faster, maybe 3 months quicker, or maybe even 6 months quicker. But at least you're going to have a lot to show. You know, you'll be able to say, look, we got this bridge built, we got this bridge fixed, and we got this highway fixed, and there's no more potholes here, and we got everybody working. And maybe the effects of the hyperinflation won't be so bad if the country is up at full capacity, full steam. In other words, full throttle ahead. So I think that might be the way to go. Might be the best option is to get the country and get everybody working, get everybody jobs back created again, and push this deflation right on out the door and head full steam into hyperinflation. Might be the best way to handle it. Might get off with not having as many negative effects from it. It's going to be negative. I know it's going to be negative. The effects from hyperinflation definitely have to be negative, but it might be tempered somewhat if you can have a country that is really chugging along with a strong economy before you go into the hyperinflation. I mean, you're going to go there anyway, you know. Anyway, silver is at 27.66. Gold today is at 18.91. It's down $5.20. Let's take a look at cryptocurrencies today. 1768 billion. With a Bitcoin price, well, she's made it back up above $40,000. 40,241. I don't think it had the energy it had before that big knockdown we've just had, you know, but it's creeping up. It's slowly heating back up again, you know. The cryptos, but we got a lot of top coins here, and they're all vying for position. Can any of them unseat Bitcoin? Bitcoin is really a saver's coin. I'm going to tell you, it's a real hodler's coin because of the limited supply and everything else, you know. And it might never cease to be that. It might continue to be that and maintain a certain price, even if some other coin does take the crown. It might continue to be a saver's coin. People might continue to enjoy putting their savings into Bitcoin, especially if the price really stabilizes good into the future, like maybe moving 4 or 5 years out. But there's always a thing we have to worry about in the back of our mind, and that is government clampdowns on it. And we just had something happen where where the infrastructure in the United States was attacked, and they made a payout in Bitcoin. That didn't go unnoticed by governments and stuff, you know. And even though that situation is over now, still you have to sit there and think to yourself, gee, what will governments maybe do about cryptos, because cryptos can be used, evidently, for things like that. Ransomware and all this kind of stuff that's going on. Boy, it's a hard place to find some place to secure your money that's really, really safe in this day and age. But I'm thinking probably the best place is gold and silver, and real physical gold and silver. Uh, Probably your most secure place. But it's hard to find some place now to get to actually put your money that is secure, you know. Uh, Dow Jones Industrial Average today is up 196 points at 34,519. And we're going to take a look at crude oil at 66.16. I still think crude oil's heading to 70 bucks, even though it's down 5 cents today. 5 cents is nothing really. Let's take a look at the move index, and we see a slowly descending move index. And today it's lost 1.6%. That's good. That means stability in the credit markets. Bonds and rates today. We see the bonds jumping. And this is not insignificant. 4.1 basis points on the U.S. 10-year is not an insignificant move. It's a fairly substantial move to the upside. We're looking at 1.61 on the U.S. 10-year, and the U.S. 30-year at 2.29 with a 3.5 basis point move to the upside. So bonds are jumping today. That doesn't bode well for gold and silver when bonds jump in price. I said that by the end of this year, I'm expecting the U.S. 10-year to cross 2% by the end of this year. I'm going to tell you that's very significant. There's a mark somewhere around maybe 2.25% on the U.S. 10-year that an awful lot of things can change in the financial markets if those bonds creep up too high. Okay, we're going to take a look at the U.S. dollar index. We're looking at a dollar index that's basically going along sideways with a few dipsy doodles in it. 89.96 for the U.S. dollar index. Thank you guys for listening to my show. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the very next episode. You guys have a great rest of the day. Bye-bye.